Today on the CEO Barbecue, we're going to be looking mostly for gold in northern Saskatchewan, but maybe we're going to stumble on to a bit of uranium, as well as we might jump down to Mexico and go looking for copper together with Fortune Bay. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, this is Fortune Bay's second time on the CEO Barbecue, so I'll save you the 10-minute company overview and I'll instead link the previous interview in the description of this video, so please watch that if you haven't yet. The reason why Dale and this time Garrett are back on, or why Dale's back on and Garrett is joining us on the barbecue today is multifold, but primarily it's the company's updated PEA on their 100% owned Goldfields project, which is actually, again, in northern Saskatchewan, which is uranium country, and it's about 13 kilometers away from Uranium City up there. So the base case economics were done at $2,600 gold, and the after-tax NPV5 at that price showed a $610 million asset requiring $301 million of initial CAPEX to be specific, and resulting in a 44% IRR and a 1.7-year payback. With that NPV more than doubling at $3,600 gold, and so it's up to $1.2 billion at $3,600, and the IRR almost doubling to 74%. So that's, that as well as the recently closed $8 million financing will be the focus of conversation today. And again, maybe hopefully a bit of an update on Mexico toward the latter part of the conversation as well. Just briefly, Fortune Bay is listed as FOR, so that's FOR on the TSX Ventures Exchange, where the average 3-month volume is about 45,000 shares. Post-financing, today this is a $66 million company with about 66 million shares outstanding, and thus also a $1 per share stock price. This is where I normally start going over the financials and so on. But again, I'm not looking to put anybody to sleep. And Dale and I talked about that 2 months ago. So I'll save you the details, and we'll touch upon, again, some of the future expected financials, as well as the plans for that $8 million here later on in the conversation. Now, for this to actually become a conversation, I'll have to shut up. And gentlemen, I'll let you do the talking. But first of all, thank you for being here today.
Yeah, thanks, Antonio, for having us.
And Garrett, thank you for taking the time to join us. Pleasure to meet you. I definitely have some technical questions here, so we're going to have some fun with rocks, if you will, later on. And I'm going to waste no time here though, because I want to know what the catch is here. Essentially, I mean the stock's up a little bit since we last spoke, Dale, but I really don't mean to blow any smoke, but even at $2,600 gold, you're now trading at about a 0.1 EV to MPV. And I understand it's a PEA, so preliminary nature and so on, but still, what's the catch?
Well, there is no catch, Antonio. And, our PEA is a robust study. It's done by Orsenka Engineering. People, it's posted to the technical reports now, posted to our website. It's been filed. Anyone can go through that in detail and see. This is a solid project. And while it is a PEA, I think everyone should also realize, it's considerably de-risked for a PEA stage project, and we can talk a little bit more about that, but just in terms of having an existing approved EIS for the project, the established infrastructure located in a historical mining area with a community that understands mining, where we have, well-established relationships already. So it really checks a lot of boxes for a near-term development project, and something we believe we can move forward very quickly, through that production case of just under 5,000 tonne per day, which means we can keep the permitting in province and leverage that existing valid EIS for the project.
It is a good summary, and I do want to talk about permitting and everything else, and I also want to talk about economics, and we'll get to the MPV specifics later on. But First of all, maybe costs. Again, something that I typically look for is your MPV to CAPEX. For you, it looks really good. I mean, you have your MPV 5, it's higher. It's almost twice the CAPEX. Initial CAPEX about 300 million, sustaining CAPEX 142, and then you have closure costs 15 million bucks there. Within the initial and sustaining CAPEX, what are the biggest line items there? What's really driving those expenses?
Yeah, perhaps Gareth would like to comment on that.
Well, the process plant, right? It's a 5,000 ton a day process plant with a whole ore leach. So, and the ore itself is pretty abrasive. So there's quite a big crushing plant on the front end of that. So overall, definitely, I think the process plant is the biggest line item there. But again, it's a far northern project, right? We're very spoiled in being a far northern project in that we have barge access straight from the regional road network, and we have a winter ice road that gets put in by the government every year. So, we are a fly in, fly out project, but we're not one of those completely isolated remote ones. But that said, it is still far northern Saskatchewan, right? So getting things up there, putting everything in, all of these higher transport and infrastructure development and construction costs have been built into that. So I think our biggest line item is definitely our process plant. But yeah, it is an expensive place to work, but that's all been built in. And I think one thing to remember is that that $301 million capex upfront does have a $50 million contingency built into it as well.
Yeah. What's how conservative were you in determining those prices? Essentially, that's what I'm getting at when I'm asking what's the biggest driver here is essentially trying to figure out like could this go over budget? So yeah, how conservative were you in determining those expenses?
Well, I think the reason you build a contingency in is to be conservative on it. Your estimates, you always want them to be a best estimate, right? So you don't want to over or underestimate things. You want to put a realistic price forward. And that's we've had to lean largely on Orsenko's experience and expertise in that regard. They did a lot of benchmarking style cost estimates, but they also reached out and actually priced these things with North American suppliers. So we're not looking to find the cheapest possible thing that we can buy out of China. We're looking to get realistic prices to get good machinery and equipment and get it to site in a way that'll actually work for the duration of the project.
Well, you also mentioned, fly in, fly out. What does that mean for your OPEX? What's the biggest line item there? You have the AI or the AISC. You have it at about 1,300 bucks. What's the biggest driver there?
Well, I don't have exact details in mind, but when we say fly in, fly out, that would be staff and general sundries and equipment. In terms of operational, one of the biggest drivers of the high operational costs there is the need to get diesel and reagents to site. So your cyanide, your lime, all your plant reagents, your explosives, right? So your mixer components for your explosives, and that's going to be barging to site in winter and then ice road loading up when you can, making the most of that. And that is expensive, and you do have to have storage on site, right? So there's been quite a big cost built into that for handling and storage of diesel and explosives and reagents on site. Those all it adds up, right? It's where you are and where you're working. It's the nature of the beast.
Hmm. I think if you mention explosives one more time, YouTube's going to flag us, and then ChatGPT is no longer going to want to work with us. Jokes aside, though, having seen the numbers, Dale, has your opinion changed about whether it's you who wants to build a mine or whether you'd like to find a partner or a buyer to push it forward?
Yeah, we obviously, we set up at the moment to really advance this project through, the PFS stages now and continued exploration. Our team's built around that, and it's really all of us around building value for the project at this time. We can't speak exactly to the long term how things unfold, and we'd certainly, look at transactions down the road, but we feel there's a lot of value to create out of the project, in the near term for the company. Obviously, companies can evolve into developers themselves and actually construct and operate. I mean, in that light, we did mention in our PEA news release that, outside the updated PEA mine plan, which is, the main road we're going down, we're advancing down that path diligently now. There is another scenario where we could even accelerate production, and that would be producing an on-site concentrate that would then be, so it's really the front end of a plant. It's a lower capex hurdle that could then be taken off site, sold, and would allow for a much lower capex hurdle, and it could be executed within that existing EIS. So it's an even shorter time frame to production. So that's something we're looking at a scoping level. It's not, we solve the updated PEA mine plan, but at a scoping level, we look at this, looking at that scenario. And under that scenario, we could see ourselves perhaps getting something into production in the near term. Obviously, we'd beef up in terms of operational, on the mining side and engineering side. But we certainly have a good range of contractors we're using at the moment. So we're not ruling anything out at this stage. We want to derive value from this project, and that's our primary ambition, and we're taking the next steps toward unlocking that value.
How did you come up with that decision essentially? Did you talk to, I mean, last time we talked about SSR mining, so I suppose it's fair to mention that as well. But did you talk to them? Is that something, you come up, the plan that you came up with, is that something you come up with after having spoken to, potential buyers or potential partners here, or how did you come up with that decision?
Yeah, that was something that's been, mulled around internally, for some time. And it was really, some of the outputs coming out of the PEA, obviously the gold price, just the nature of our mineralization. It's high grade, it's among the highest grade deposits for open pit developments in the Americas. It has a very favorable metallurgy. It's mostly free gold. There's a little bit occurring around sulfide. The sulfide content is low. There's very little deleterious elements. These deposits stick out of the ground. The initial parts, there's no strip. It's just easily accessible. It's in a very favorable setting. So you start thinking, well, there could be a fast track here to just start producing this concentrate at a low CAPEX or low initial CAPEX, hurdle and get something moving. So it's something you had mulled around amongst, our board and management, and together with, some consultants. And we said, well, let's start doing some work toward that. And maybe Gareth can talk a little bit around some of the testing that's underway to evaluate that alternative scenario.
Yeah, Garrett, do you talk to me about that? I mean, what exactly do you have to do before you can answer that unanswered question? How long is it going to take you, and how much money is that going to cost?
Yeah, for sure. So it's a pretty low hurdle to get an initial answer. And then, of course, it turns into you need to do more studies to flesh out the exact details of it. So at a high level, we're basing this on results from 2015 metallurgical studies that was done at SGS, where we came up with the whole ore. That provided the basis for the PEA process that we have at the moment. But if you look at that carefully and you read through it, this deposit by nature is extremely nuggety. It's got a lot of very free coarse gold in it that can come out in gravity. So every single metallurgical study and analysis of this that's been done says put gravity on it. It's a no-brainer. You have to do that. You scalp a significant amount of the gold out, and it's quite cheap. It gets that out into a concentrate. And the numbers around that initial gravity concentrate are almost 1,000 grams a ton. So you're pulling out a small concentrate from this ore stream that has 1,000 grams a ton in it. And then we focused on the whole ore leach with carbon recovery, but part of the study also looked at flotation. And the first flotation pass, the results indicate it's possible. The second flotation failed because the mass was too small. But the first flotation pass showed that you could potentially, combined with the gravity, put those two together and get a mass pull from this ore stream as low as 0.7, 0.8% of the total mass. And you could put almost 90% of the gold into that mass. And, I think you look at where we are and you think, well, getting a concentrate out of there is, it's just not gonna fly, right? Because the ops and logistics around that are just too challenging. But when you put gold where it is now and you generate those types of concentrates, I mean, your 1 ton bag of concentrate is going to be worth more than $1 million, right? And that starts to become feasible when you look at the fact that you're shipping in diesel and your reagents. I'll exclude that one word there, and other requirements for site. You look at a situation in which you could just be shipping material out at the same time. And with gold where it is, there's smelters around the world that are screaming for this type of product, right? It's a very clean product. It's just going to be a sulfide pyrite gold concentrate. And if you can get that grade over 300-400 grams a ton, it becomes something that you can definitely look at. Now this is, just to emphasize, we're advancing this project on the basis of the PEA as it is now, but we do need to do more scoping around this alternative scenario, because another key thing here is that we have an existing EIS back from 2008, right? And if we go the PEA route, we're going to have to make some additional amendments to that. We're going to have to increase the scope of the project. We'll talk more about that later. But I just want to highlight the fact that if we went down this route of a fast track and generating a pyrite production, you're looking at a scenario in which you can almost exactly conform to the requirements and the stipulations of that original EIS. So that gets us from the realm of having to update and redo things and getting us into the realm of just having to refresh data and fast track it. It takes a year or so off of the production, off the timeline into production. And built into that, of course, is now you're taking away your entire cyanide leach and recovery and electrowinning process part of the recovery plant. You're almost halving the cost to actually build the process plant. And that's a massive deal as well, right? Your money is expensive to get. The capital hurdle is one of the biggest issues here. So if you can enormously reduce your upfront CAPEX requirements, it gets a lot easier to get that money, and then it's a streamlined production scenario because the environmental permitting stuff becomes easier because it's the same footprint that was originally permitted in 2008. Yeah, and in terms of what we are currently doing to support that, we collected a metallurgy sample and sent that to SGS. It's underway right now. We're processing the gravity side of that right now. And as soon as we get the flotation results for that, we'll be in a position to actually see, is this a viable option? We need to actually confirm what that mass pull is from the total ore stream and what percentage of the gold we can get into that. And then, of course, you need to scale up your metallurgy testing. We'll have to do more testing, do some variability testing, do it on a larger scale, and actually pin down the exact numbers around that.
Sounds to me like you might like talking about rocks, which I actually appreciate because this opens the door nicely for me pretending to be smarter than I am later down the road, which I'll do in a couple of minutes. But just to go back to that permitting, I know you've right-sized the project to optimize for permitting here, so that's the 5,000 TPD. What more do you know about that right now? What are you going to have to do here essentially to besides stay below that 5,000 TPD? What else do you have to do, and what more do you know about permitting now as is?
Yeah, there's a process there. It's well established in Saskatchewan, and what it really kicks off with a project description. So we have this existing EIS, and it's valid, and it's something we can build upon. And under the Environmental Assessment Act in Saskatchewan, you can amend these permits. There's a section 16 for that. So we're looking to make an amendment to the permit for two main reasons. The one is that it is from 2008, and some of the data that went into that EIS, is before that, obviously. So there's a bit of a time lapse. So regulators say, well, this data, yes, your EIS is valid and you can move forward, but this data is quite old. Has anything changed in the environmental baseline conditions since 2008? So that's the one thing. We've already completed work this summer. We got ahead of that. That work's done. We're waiting for final results. The other change is not just is the time lapse, but then also under the PEA plan, there's also the mining of a Athona, which wasn't originally included, plus a larger TSF. So those are new areas that have to be assessed. So yes, and we've also collected data from those areas now that will go into our plan. So all this comes together at the end of this year, and the process then is to define what the project is going to be for us. It looks, we've got a great, robust, updated PEA. That's the main path here. That's we're driving toward. That we'll submit as a project description. In the event this alternative production scenario Gareth was talking about looks very favorable, we'll have numbers by then. That may become the way we take it forward. But what's essentially needed is we need to go to regulators with a plan that's summarized in a project description. And then that is used for they will advise then on that what additional assessment might be needed. That will also trigger the duty to consult. In other words, they will say, right, now with this plan, you need to go start talking to the communities. On that front, we have an established relationship. We already have an exploration agreement. But we're also getting ahead of that by having initial community meetings in November this year. So we've scheduled a tour for late November to visit all the communities to start talking about this project plan. And it's viewed very favorably when companies engage early rather than mandated by the government at a later stage. And that's been our operating, the way we operate and our commitments to the community is to always be transparent early. And we've always done that on the project, even prior to the exploration agreement. So we're just following through with who we are as a company there, and getting that engagement done earlier than we actually need to, and really trying to stay ahead of things here on the permitting front, because at the end of the day, we believe, regardless of how we develop the project, that's the critical path. That's the path that we think will take potentially the longest, and other studies can fall within that. So we really want to get ahead on that, and obviously it's a key topic nowadays in terms of getting mines into production.
Did you have a chance to present the PEA to the First Nations you're working with, or the local communities already?
So that is the plan for late November, is to talk through that updated PEA plan with the communities. The community representative and the communities, they've seen the updated PEA. They follow us on social media. A lot of them follow our websites. We get inquiries, so they're aware of it. We have notified the representative for all the communities that the PEA is out. They've had a look at it, so they're all anticipating the meetings where we can sort of break down in simpler terms what the PEA is about, what the impacts are, and start to basically discuss the plan and the impacts and benefits with a future mining operation.
Does you being on the shores of Lake Athabasca pose a challenge from a community, or maybe even from a government perspective?
No, there's nothing identified there that would pose a challenge. If you go to any of these mines in northern Saskatchewan, it's just, there's lakes everywhere, right? Yes, it is a big body of water, but that area's seen mining over the years, right along that shoreline. There's been numerous uranium mines. I mean, Gunner mine was right up against that. That's now been, fully rehabilitated. It was handed back to what's being handed back to the province. So there's nothing identified there, or any specific concerns. With our project in particular, the geology it's very competent, hard rock. There's been no indication from the previous hydro and geotechnical studies, as well as historical mining in the area, which went below lake level, to suggest there's any major, mine to water interactions there. In fact, it's planned to design on an annual water deficit, where actually water would be required from the lake, and it's handy, it's right there, that water can be taken to the processing plant, and there's nothing discharged. So it's no concerns raised. Obviously it does need to be de-risked further, but there's been no concerns from community or identified in our technical report or previous studies. And the project has a lot of those, dating back to previous operators who had done, a feasibility on box. There was a pre-feas from 2011. There's a huge amount of data for this project, and there's really never been a major red flag there. The valid EIS for the project really does set a positive permitting precedent. It's from 2008, so it is dated. And there's been some changes in regulations, but none to the scope that would affect that precedent. It's still a positive precedent, and the main changes since 2008 in terms of legislation is really around the duty to consult, which wasn't really done properly. But we've got a good foundation to advance on that, and obviously engaging with communities in November.
I think if I can just jump in, sorry, another point to make on that, sorry about that, is, the Uranium City is a mining town, right? Everyone knows mining in that area. They understand it. It's an industry that they can relate to. And what they do understand is the difference between uranium and gold, right? So uranium is a commodity where you have environmental concerns. One thing about, and this is what we need to communicate about Box and Athona, is that they're granites, right? They're mined granites. They'd make a nice kitchen countertop. They've got gold in them, and they've got pyrite in them, a little bit of pyrite, and then they have some minor accessories, minerals like sphalerite and galena and things like that. But this is not a deposit that contains any kind of what we call deleterious or problematic elements in it. This is just granite that you're crushing and putting into a waste rock pile. You need to do the studies to see if it's going to leach any significant metals or if it's going to generate any kind of acid. But we do have data on this. And one of the things we need to do is de-risk and improve those data sets. But every single indication we have, all the geochemistry we have, say that this is an incredibly benign piece of rock and that nothing you crush and generate out of it is going to generate any kind of outcome or effluent that is going to contaminate or poison any kind of water body there. It's just not the type of material that does that, right? And I think the community has a basic or a very good understanding of the difference between uranium and gold mining, and that's it's something that we want to continue to talk about as well in the story that we put to them.
I think my Europeanism showed in that question, because if you try to do something like that in most of Europe, close to a lake, it would probably be a non-starter. Not everywhere. There's other spots in Europe that do work, but it is quite different. And I've not been to Saskatchewan, but I've flown over it, I think, and it's lakes upon lakes that you can see there. So,
and I think it's important to note, some of the uranium mines there. There's been mines sort of at Rabbit Lake, which have actually open pit mines that have gone into lakes through the construction of cofferdams. There's uranium development, fission at PLS, that's now Paladin, that's going under a lake. And that's not to say the Saskatchewan allows, they don't do the proper reviews. I mean, they're very strong on the environmental side, very strong on the community side. But there's precedent that these things can be done responsibly, they can be mitigated. And, those are examples from uranium, which, as Gareth pointed out, it's far more complex. There's far more in the way of deleterious elements. So it's certainly not an unprecedented, to be mining close to a lake. We're not going even into the lake with cofferdams. We're not proposing that. We're keeping everything within the distances required from shorelines and advancing on that basis. So, we don't foresee any real issues there moving this forward, provided, obviously, of course, as a responsible operator, we show that we're planning everything in accordance with the regulations, and any risks will be appropriately mitigated through the life of mine.
Mm-hmm. Are there any competing users who could theoretically object? Like, is there someone else using any of the water from the Athabasca Lake?
No, I mean there's no interactions with the lake itself. So the lake is used for fishing primarily. It's obviously a huge body of water. There are some communities around the lake, but because there's no interactions, we don't, and that will obviously be communicated to communities, and that based on our plan. So we don't envisage anything particular there, but we've got to obviously do this step by step and in line with new data as it comes in. But certainly to date, based on our work and all the legacy, the large legacy of historical data, there's been nothing flagged there.
How does being near, I suppose, lake influenced structures influence your geology here, though? I mean, or your slope angles, and therefore, I suppose your strip ratio. And I suppose, Garrett, this is where you step in again. But yeah, could that be any kind of challenge, or could there be any kind of influence?
Well, I think, like Dale mentioned, we do have hydrogeological data here, which shows no significant water ingress. There was mining operations that went below the level of the lake, and there was never any reports of water ingress there. So we're not concerned about that at this point. We need more data. I mean, we have enough data to support a PEA study, which is what we've done. But in order to go to a pre-feas, we would need to do more groundwater study. We would need to do more geotechnical drilling, and we would need to make all of those assumptions. We'd need to pin all of those kind of criteria down for the planning stages. We've adopted an average 50-degree slope angle, and we've pushed it back as far as we can at this point, maintaining a 30-meter offset from Lake Athabasca. And the rocks, like I said, they're very competent. We don't have significant geotechnical concerns, and we don't foresee any major issues there. It needs to be de-risked. We need to do more drilling. There's potential that you could have to slightly shallow that. There's potential that you could also steepen it slightly. And if you can steepen it, then you can access deeper portions of the ore body without actually further encroaching and getting closer towards the lake. It's just one of those things that we need more data on. We do have data. Like I said, there's been geotechnical studies before, and they recommended a 55-degree slope angle. Orsenko took a slightly conservative approach and averaged the southeast side of that slope, which is up against Lake Athabasca. They averaged that out at 50 degrees. we're lucky, and the shape of the ore body is actually very beneficial in terms of the strip ratio. So it's actually the morphology of the body itself that gives it such a positive strip ratio. It's a sill, it's a flattish body that dips at about 38 degrees towards the southwest. So that northwest side of the body, that side of the pit actually just follows the exact base of the deposit itself. So you're not mining any waste on the northwest side of the ore body. You're only mining waste on the southeast side of the body as you mine down the dip of this thing. So you're taking out the rock that lies on top of it and pushing back away from that. So because that northwest slope is actually quite shallow at 38 degrees, we've been able to build the ramps in on that side, which allows us to steepen up that angle towards your kind of optimal geotechnical outcomes of well, the study suggests 55, but we went slightly conservative and stuck with 50 in the PEA plan.
How sensitive is the NPV to changes in the slope by, I mean, yeah, by 5 degrees, as you mentioned there?
Not very. I don't think that would be a huge thing, because once you get down to the very bottom of the pit, your mining costs, everything is starting to increase at that point, right? It's so much cheaper to pull your shallower ore out with less strip ratio that I think as you get towards the deeper portion of the body, you're just increasing the life of mine and adding marginally to the MPV. You're not adding significantly to it by accessing those deeper resources. It's good to get them. It's good to increase the life of mine, de-risk the overall project from an economic standpoint. But I don't think that losing a little bit of the bottom of the deposit will make any major difference to the NPV.
And I should just add in here at this stage, Antonio, I mean, what we're talking about is specifically the box deposit. This is 80% of the resources. It's the higher grade. It's the primary driver for value. Athona is the smaller deposit. It's 20% of the resources. Athona has a 1-to-1 strip, so it's even a lower strip. But we're talking more about box in this particular case, which is the primary driver of value for the project.
Mm-hmm.
Well, I just wanted to talk about grade in that case, because I think that matters here as well. You're going for 0.28 grams per ton at $2,600 cutoff. Is that how did you come up with that? How again, just how conservative is that, or how realistic is that cutoff grade to actually mine at?
Well, that's the recommendation from Ausenco. They did the full analysis of the benching, the grade distribution, the overall cost of working there, and they came up with the lower economic cutoff for this body should be 0.28. So that's what we used. That was their recommendation.
Yeah, what do you think? I mean, how conservative is that recommendation?
Well, with gold at $2,600, your 0.3 grams a ton is still paying, right? So you're adding it into your ore flow and recovering gold from it rather than hauling it to a waste rock storage facility. So yeah, it's that balance between increasing your resource and slightly decreasing your grade, right? It's that fine balance on what ends up making the overall sense of making a slightly longer and bigger project and mine life, as opposed to shortening it and just focusing on the shallower, higher grade stuff as best you can and optimizing it to a very short. Overall, we want to make this the most reasonable and reliable project that it can be. We want to put something out there that's going to have legs, and de-risking it by making it a bigger project and extending the mine life slightly is something that we feel is beneficial for the overall project and beneficial for its development.
Mm-hmm. How sensitive is the project to changes in cutoff overall? Like if we push it up to 0.35 and just naming numbers here, but what happens to a strip ratio? How sensitive is it? And also what percentage of the MPV would you affect that way?
Again, the most sensitive thing that this project is simply gold price. If you change your bottom cut off marginally, you might reduce your overall recovered ounces. Again, don't quote me on this, and I probably shouldn't be saying these kinds of things out loud because I'm just eyeballing this at this point. If you change your cutoff grade from 0.28 to 0.35, I think you might reduce your total recovered ounces by something like 60,000 ounces, 50 to 60,000 ounces, and that's the lower grade material as well. So you'd be excluding that lower grade material, hauling it to waste rock instead of processing it. So your overall costs and things would go down too, right? So it's that juggle. You're making it a slightly bigger project and extending the mine life, but you're lowering the average grade very slightly by doing it. I don't think it would have any kind of significant impact on the NPV in the long run.
Just as maybe a bit of a side note, I'm going to be back to what you just said here, Garrett. But the LOM, you mentioned the life of mine. was that part of the determining that LOM and making off that balance there? Does that have something to do with permitting or the community? Like, did you have to consult them and be like, we want to show them a long life asset, and yeah, did that play any role in your decision making process?
Yeah, so I mean the mine life's primarily driven by the throughput, that sub 5,000 ton per day pushes that mine life out a little further than, what we did in 2022 with the original PEA. So we have a longer mine life. That's attractive, obviously, from a financing point of view. Financiers like to see sort of a longer mine life, so that is attractive. It's not, it's really a case of the throughput that's determined that.
Mm-hmm. Yeah, fine. Just it was kind of an in-between note, Garrett. I'll go back to what we were talking about just before. And really why I'm asking about grades and cutoff grades is not because I think gold's going lower and hopefully definitely not below 2,600, but because I'm thinking about the type of system you're dealing with, which again does show negative behaviors in some of the different domains. And I think that means that reality won't always necessarily be the same as theory here, right? So what's kind of the grade reconciliation tolerance, if you will, in the first 2 years? Like, is it 10-15%, or could it be is it lower? Could it be higher?
Well, we're in the very kind of happy position of actually being able to do a grade reconciliation already. Normally your process plant would have to go into production for a year before you could do a meaningful reconciliation here. This box deposit was actually mined back in the 1930s, early 1940s. They mined out about 1.3 million tons of ore, and they processed that and recovered about 65,000 ounces of gold. So we have very accurate stope models of what's been mined out from the ore body. And if we cut those stope models against our resource estimate, we get 1.3 million tons of ore. It's an almost exact tonnage reconciliation against what was mined out before. And we pull out an amount of gold that so the resource estimate has the total amount of gold in it, right? There's a process plant, so you don't get the total amount of gold. It's the recovery efficiency of your process plant that drives exactly how much gold you get out of that. So Kaminko, they're the ones who did the underground mining back in the 40s. They said that they recovered 96% of the gold, which seems a bit like wishful thinking, but we've used that because it's their official number. If you apply that 96% correction to the amount of gold that we extract from our resource estimate using those stope models, we reconcile to within 1% of the historical production of 65,000 ounces. So, and let's just take a little backtrack here and think about a process plant on the north shore of Lake Athabasca back in the 1940s. They reckon they were getting 96% of the gold out of that, which is what we think we could get with a modern whole ore leach plant out. We reckon we can get about 96% of the gold out. If you go through and you read the production reports from the process plant themselves, the engineers were screaming for a finer grind. They were screaming for more cyanide. They were screaming for longer leach times on the reagents. They were asking for improvements to the process plant themselves, and the production reports reckon that they were getting between 91 and 93% of the gold out. And if you look at the tailings, we've done some limited, or not we, historically, the operators did some sampling of the tailings that are lying around next to that old production plant. And the average sample grade from that is about 0.15 grams a ton. Now, gold in tailings is a very wishy thing, right? It all settles, especially in these areas where there's freeze and thaw. The gold all goes to the bottom. It's very difficult to sample because it's very inhomogeneous, but there's gold in those tailings. It's not, so they didn't get 96% of the gold out, is the point I'm making. And if you think about that, it means that actually our reconciliation is being extremely conservative. It means that if they got 90% of the gold out or 85% of the gold out, our resource estimate is actually on the conservative side. There's actually more gold there than we're estimating, which I think is it really ties to the way that our resource estimate was done by SRK. They used a very aggressive, to take a step back here, we inherited a resource estimate because there were previous studies done on this project, right? So when we activated the project in 2020, we inherited a resource estimate with it, and we reviewed that and said, we need to redo this. So we got SRK in, and they came in with a very modern approach, and they used a very aggressive capping approach. They just capped the gold numbers to reduce the influence of these very nuggety, coarse, high-grade individual samples, because these things, when you use them in interpolations, they can smear high grades all the way through the deposit, right? So they capped these numbers down. And then I won't get into the details of how they did it because it's a little bit beyond the scope of this, but they used another stage of capping where they used the structural controls on the mineralization to only allow the high grades to influence blocks that were directly in line with the structural orientation. So they didn't allow any kind of smear of high grades out across through in this block model. They only allowed the high grades to populate narrow corridors along where these mineralized vein sets would be. So, all in all, they've generated a block model that looks like the mineralization we see at this body. It's extremely inhomogeneous. And yes, there is a lot of variability. Like you say, there's absolutely a lot of variability here. It's a very nuggety deposit. There are vein sets that carry high grades. There are vein sets that, and there's background rock portions of the deposit that aren't that pervasively veined and don't carry that much grade. But we've got, Box has got 430 holes in it. It's got 24,000 assay samples. This thing has been pincushioned into absolute submission.
And sampling of development drives, channel sampling.
Yeah, that includes that too. So, if you look at just the sheer volume of sampling, the spatial distribution of those samples, there's no assumption of continuity here. There's demonstrated. We know exactly what the mineralization looks like in this body, and we've represented that in the block model. So we've come up with a very reliable resource estimate that we can make decisions on. And the reconciliation with the historical production, I think, really just highlights that, right? We don't have any real concerns around the resource estimate, other than that it might be slightly on the conservative side.
And perhaps just worth mentioning again, this updated PEA plan includes, 97% indicated resources. I think people used to seeing PEAs as based on inferred resources. This is almost all indicated resources supported by a huge amount of data, plus it reconciles to within 1% of historical production. We're very confident in what we have there and advancing on that. And that's why we like to say this is de-risked for a PEA stage asset, because the resource itself is particularly solid in our opinion.
When you talk about the historic operations and the great reconciliation there, they did do underground mining, as you mentioned, you're doing open pit. So they were able to be a little more selective, I suppose, with what they were mining and leaving out, right? Is that going to have an influence for, again, real life scenarios here?
Well, I think the historical operations were challenging. It's difficult to get it. You're basing your understanding of what happened there on these old PDF reports, right? They did their first resource estimates and they thought that they were going to get 4 to 5 grams a ton out of this, because they were smearing grade. They were ignoring the nugget effect, and they were not doing a great job of handling that, right? It's difficult to deal with this type of inhomogeneous deposit where you've got very high grades up against very low grades. It's difficult to deal with that. And then they went through a stage where they just thought that their process plant wasn't working at all, because they were only getting 1.7 grams a ton out when they were expecting to get 4 grams a ton out. And then, they did audits of the tailings, realized there was gold in the tailings, but not a huge amount, right? They weren't recovering 40% of the gold. And then they kind of realized that it was the nature of the deposit itself. So I'm not convinced that they were that effective in following specific mineralization systems. And I think it would be quite challenging to do that here, because you would need extremely detailed drilling to define these quite narrow, very high grade systems down. They took out 1.3 million tons of ore in fairly big consolidated stopes, right? These are not little channels that are following the specific high grade material. I think if they did that and they followed specific high grade systems, they would have been mining 10 grams a ton. But I think they had requirements to get tonnage out of the ground, and they were just pulling larger stopes out. And, those bigger bodies, or those stopes, those larger volumes of material that they pull out are, they contain high and low grade material, which is why they averaged out at the lower grades, is because they just didn't selectively follow the specific high grade systems that are there.
And to be fair, gold was like $1 a kilo at the time. So times
there's no
were
way,
different.
Yeah. For a northern project, there was no way this was going to fly as an underground development.
Yeah. I'm sure someone's going to correct me in the comments, by the way. I didn't actually mean it is $1 a kilo, but it was cheap. I do also see that 70 gram per ton cap. What if again, what happens, because you said you have that variability, and so spikes, what happens if you cap that to, let's say, 50? Or what happens to the early years head grade in that case if you cap that?
I didn't understand the question. Sorry, could you say that again?
So you're capping it at 70 grams per ton, right? If I get that correctly.
I don't remember saying that. So the actual capping itself of the samples was done by grade domain. I think samples that were 100, 150 grams a ton, depending on what domain they're in, they were capped down to either 30 or 40 grams a ton. I can't
Okay.
remember exactly this. The bulk of this resource estimate was done 3 or 4 years ago. I can't remember the exact capping numbers. I can pull it up if you want, but it was very aggressive. They took substantial amounts off of those bigger high grade numbers.
Yeah, because it's kind of like it's really a balance here, right? Because if you just go out there and it's uncapped completely, you risk being over promotional, and then if you
For
cap
sure.
too much, you risk like not showing a lot of value there. So
Well,
over under
well,
promising, it's kind of a
yeah.
balance.
That's what it's supposed to be, right? It's supposed to be a best estimate. You don't want to be too conservative because then you're not allowing yourself to actually make the best decisions you can about the thing. But also you don't want to be promotional. You want the thing to be what it is,
Yep.
the best representation that you can make.
Yeah, yeah, that's fair. Theo, you and I talked about last time we spoke. We touched upon metallurgy, and you saw that you said it was simple. Numbers are looking good across the two deposits now as well. So you're again 96 is Garrett what you said you had taken just from their estimate, and then 93.5% respectively for Box and Athona, respectively. And but how's overall variability within the deposits like Box and maybe per rock type? Really, I'm wondering because there's different hosts, right, as well. What's kind of the lowest versus the highest recovery you get across the different metallurgical domains?
Well, maybe, just I'll start off there. Maybe Gareth can sort of finish there. But, there's really not different domains here. It's a single or rock types. It's a single rock type is the host. It's a granite. And they're quite similar between Box and Athona. They're called the mine granites. And it's in these mine granites you have these veins. They brought in the gold. A lot of the gold is in the veins, but some has been disseminated out into the granite itself. So while there is variability of grade across the deposits, it's really within a single host rock. And I don't know, Gareth, if you want to talk a bit about the variability there.
Oh, just get it before you start, because this is why I ask that, just maybe so you can kind of see where I'm at with this, where my understanding is. But I was thinking, like, is most of the grade in the vein domains, or like kind of what's the split between how much gold there is in the granite versus what's in the vein domains? That's where I'm coming from.
Well, all of the gold is associated with the veining. So the veining is carried these gold-bearing fluids into it. It's hit a reducing environment and it's precipitated out the metals. It's just the extent and the density of those veins and the size of those veins and how they're distributed within that mine granite host. So, and that's where all the kind of variability comes into it, right? You get these major vein systems that come through where the veins themselves are a meter wide and they've got more pyrite and more gold in them. And then right next to that, you can have 5 meters of mostly granite where there's this slightly pervasive smaller vein sets in them that do carry gold, but it's obviously significantly lower content, right? So that's primarily what drives it. It's how the rock is broken and it's how these veins have come into it and the density of veins in any one, the overall density and the thickness of these veins in any one location. And again, it gets even more complex than that because there are different generations here. There are different orientations. There's a vein set oriented northwest, southeast. There's a vein set that's oriented northeast, southwest, and some of these carry slightly different grades to the other ones. That's why they've used different domains. When we spoke about different domains, they were talking about grade domains, not geological domains. They're the same overall host rock. It's just a way of representing the grade and the density and gold content of those vein sets that are inside of them. And in terms of variability, I mean, you're looking at a 5,000 ton a day process scenario. So you're putting through significant volumes here. So, reconciling block against block in a block model is just not something that is meaningful or useful when you're looking at production reconciliation on a mine like this. You're going to be reconciling against monthly production or quarterly production, right? And at that level, you're pulling in significant volumes that contain all the scale of variability inside of that, right? And it averages out. The point of this resource estimate, it gives you a really good representation of the grades that are there on the scale of monthly to quarterly production. So that's what we're trying to do. It is an open pit thing, right? You're digging out all the ore, you're processing it as best you can, you're segregating the low from the high in the block model, but you're pulling out bigger volumes that encapsulate all of this variability and you're putting it through the processing plant and you're coming up with an average that reconciles well with your resource estimate.
Is
Yeah.
the expectation, and this is with regards to host rock and mineralogy, is the expectation for some of the nearby exploration targets that you have, do you expect that it would be kind of the same gold essentially, or the same type of system?
We're expecting there to be parallels, and we know that there are. There's a showing called Frontier nearby, which is logged as a mined granite. It's a hematized granitic-looking rock. It's highly metamorphosed and resilicified, and it's broken, and it's got quartz veins in it with gold. And there's some very compelling grades there. Frontier's it's significantly smaller. These are exploration targets and things that could potentially, with more drilling, add some ounces to the project. Frontier, it was worked by SMDC back in the 80s. They put in 300 meters of underground drifting and then they did some underground drilling, and they got compelling results. But the problem was there's not enough drilling there to actually pin down any kind of resource. The body is small, so they left it because on a standalone basis it was never going to fly. It's a small thing. But it's got a couple of 100 meters of strike length. It's 10 to 12 meters thick. It dips to the southeast. It's got a lot of parallels with Box in that the morphology, the dip angle, the type of rock are all the same, gold-bearing vein sets in these hematized granites. And this thing sticks out its surface again on a ridgeline, and it dips at about 35 degrees to the southeast. It's an extremely favorable strip ratio. So it's the kind of thing where what we want to do, and I know we've talked about this exploration, not here, but we have been talking about it quite a lot in our materials, is we want to go in now and look at these historical occurrences where people looked at it and went, this is on the smaller side where it doesn't fly right now, so we're going to walk away from it. Or they drilled, followed up by drilling in the wrong place, and they didn't do a proper job of it. We want to go in and drill some very kind of strategically located holes just to test out mineralization continuity between intercepts and to demonstrate mineralization continuity and to see what the size potential is. And with not a lot of holes, we can go in and get a lot more information about these other occurrences that we have on the site to support decision making going forward as to whether or not at this stage, it's expensive to drill out resources, and it's something that we could potentially leave for later on, right? If we see that it's a smaller body that, yes, it can add ounces, but we're going to have to spend this much money to drill it out, and that's too dilutive at this point. It's a balance between how much it costs to pull those ounces into your portfolio at this stage, right, of the process. It's something that can be done later when the mine is in production. You can go in and drill it out as part of your ongoing development.
That's actually a good point. And it will tie nicely into some other stuff that I want to cover here later. But really what I'm asking there is, if you find more gold, would it be, and forward looking into your best of your abilities and everything, but would it be similarly deposited, and therefore would it be similarly processable without too much, again, additional upfront CAPEX? Could you find something that reasonably makes it into, either an updated PEA here or a PFS on these two deposits?
Yeah, for sure. Everything we've seen, we haven't seen anything that's saying that the type of gold you might recover in these other occurrences would be something that we couldn't recover through our current process plant, right? It's all hosted in granites. They have similar properties. They're gold-bearing veins. It's simple mineralogy from what we can tell. There's been no metallurgical studies done on these things, right? So we're basing it on visual interpretations of the logging in the core, in that it looks similar to Box. At Athona, we've talked about that West Mine granite. It's a body of ore right next to Athona. It's small. It's not big, but it's mineralized, and there's not enough drilling in it to support a resource estimate. It sticks out of the ground at surface, and the pit that they designed on this PEA actually partially overlaps the body. So we could go in there, and it looks exactly the same as the Athona mine granite. There's a chance to add some more ounces there, and yes, I mean there's no indication that wouldn't be something we could just throw through the process plant and add to the production. Yeah.
So next time you go exploring, where do you go? Where do you step out? How much? What direction?
Yeah, so that's something that we're busy looking at the moment. With our financing just closed, we're wanting to get going on the drilling as soon as we can, and there are a couple of different targets. I can talk about that more generically. I mean, at Box, there is more to do. There's a big gap that I've been eyeballing for a while now on the north kind of eastern side of the body. It's at depth and it's below the pit extents, but there's a gap of about 200 meters in drill coverage directly down dip from the body that just hasn't seen any drilling, right? There's a big hole in the coverage there that we want to put probably 2 holes into, and it's deeper down, but it's down dip from a gold deposit, right? You want to test these things and make sure you're not missing anything significant down there. That's gold. Sorry, that's Box. At Athona, I mentioned that West Gold.
Yeah, maybe I'll just jump in. Also at Box, we did some drilling there in 2021, and there wasn't, the market, didn't really respond. There wasn't much going on in the equity markets at that stage on the gold projects, but we had some really compelling intersections outside of the mineral, below the PA pit, outside of the mineral resource estimate, just down Dipper Box, on the more on the southern side, Gareth's talking more about the eastern side, but there we had, 9 gram a ton over 5 meters. We had a 13.2 gram a ton over 8 meters, 8 gram a ton over 12 meters. Those were some of the highlights, but a lot of these intersections are in these, what we were talking about, these higher grade vein sets. So there's more quartz veining. And what we could see from that initial wide space drilling down dip was there's apparent sort of continuity. It looks like these things could connect along these single ore shoots or vein sets and could provide underground mining. Now, you're looking at like 9 gram a ton, 13 gram a ton, 8 gram a ton, over substantial widths. These are very compelling underground grades. So what we need to do as part of this exploration program is go back in there and infill, drill between these 50 to 75 meter space holes and look to establish that continuity and around which we can then start to look at a underground mining scenario. Because across that Goldfields syncline, the Box deposit is wide open. There's one hole between Box and Athona. It was drilled in 1988 and it's 4 gram a ton over 3 meters. It's at depth, so it's part of our underground mining plan potentially, but it really, there's a lot of potential down there. It's all underground potential, but it's a matter of more drilling, defining where these things sit, the structural controls, and then ultimately delineating resources. But, that's got the real potential there to also move the needle on the resource side. So really excited to be working that angle at Box as well, in addition to, the frontier and the other targets that Gareth spoke about.
The money you've just raised, the $8 million, how much of that is going to be step out versus infill?
So, we've got $2 million of the 8 million is flow through. Obviously, that's got to be spent in Canon exploration. So naturally, all of that will go toward this exploration drilling program. We could get 4.5 to 5,000 meters of drilling there. It might be 20 holes. But again, to Gareth's point, we're looking to strategically locate holes now. There's lots to do. But locate holes to pinpoint the best areas, to point to that resource growth potential, and then allow for some further follow-up. But I think this phase of drilling will be really important for the project as a whole in terms of tying together a potential larger resource growth plan and where to focus. And really looking forward to that. So it's none of it's going to be infill to the extent of getting indicated or anything like that at this stage. Infill to tie together continuity. I think it will then start producing inferred resources on the underground scenario, but a lot of it's more just testing, step outs and testing other targets across the property, as well as, some holes like at Golden Pond, Triangle, Frontier. These are all historical results. We'll need some holes just to start to validate some of the historical results, and then we can sort of do those bigger step outs to point toward resource growth.
How far does this money carry? It's $8 million. You said 2 million flow through, which is all exploration. How far is that the 6 million hard dollars going to carry you?
Yeah, so there we've got obviously some key sort of PFS studies underway on the engineering side. There's some in money obviously toward permitting, some of the baseline work, and community side. So across Goldfields, it's another call it 4 to 5 million. And then obviously there is provision there for some starting exploration in Mexico to the tune of around $1 million once exploration agreements are in place.
I like the confidence there with regards to Mexico, and I'll definitely ask about that. The money that you have, I mean, it's a bought deal that you raised without a warrant, which, by the way, congratulations. Not a huge fan of warrants myself, but where it is a bond deal though, and so it is a charity flow through as well. So do you know who the back end is? Do you have an idea as to who the end buyers are going to be, or who will end up owning the stock in the end, essentially?
Yeah, for sure. I mean, we've obviously spoken to a lot of people leading into this financing, various funds, family offices, groups of that nature. So yeah, we do have some indication of where that will end. The final book hasn't been provided. We just closed this morning. So yeah, we'll have a look at that. But certainly, credible group, and obviously working with a company like Cormark, they've got a really strong reputation, and we've always been about trying to put our shares in the right hands. We've done that effectively to date and looking to continue that while also, broadening our shareholder base.
Mhm. Who's taking the financing, or how's that yeah, how's that from the perspective of is it mostly retail? Is it a lot of institutions? What's kind of that breakdown for the financing?
Yeah, it's more family offices, investment funds, things of that nature. Yeah, it's not. There are some retail investors coming in, some existing shareholders, buying again. Some of those shareholders got in earlier at 30 cents, and they're still, coming in at $1 here. They're not selling. They see the big picture. We $60 million company, 3 million ounces across our two projects, and plans to unlock that value.
Timeline. I mean, you said you're going to be spending some money on a PFS, of course. Is timeline fixed now, or would you want to see what exploration brings sort of next season?
Sorry, I missed that first part of the question, Antonio.
Just asking about PFS timeline. Essentially, when's the PFS going to be out, and what's the decision going to be?
Yeah, so we haven't provided any guidance on that yet. We're doing studies now toward PFS. We've got the drilling. We plan to start right away. There's a combination of drilling here. There's the flow through. It's going to fund exploration drilling. We also need to do some drilling on the PFS side, geotech, metallurgy. Those studies are all going to come together, and then we'll look to commission the actual PFS later in the year. So there's no specific timeline committed to for PFS completion, and that will make a statement down the road once we've collected some of these additional data sets needed.
Do you think why I'm asking about timeline is because I'm thinking whether you think it makes sense to shop the project before that, but before you've gone, and tested the other targets, or before you have the PFS numbers there. Are you going to be, actively looking for partners or potential buyers out there in the meantime, or are you kind of going to, sit quiet and see what the PFS brings?
Yeah, I think from that perspective, we've obviously engaged with potential suitors for the project over the past few years. There's been continual sort of stream of interest and some very reputable interest. And there's while production companies looking for new assets, they sometimes will do their own PFS, FS. There's been a few themes there in terms of identifying like just some key de-risking items, in terms of some of the geotech, metallurgy, power, things of that nature toward the project. So we see the merits in de-risking those aspects. So for one, it's going to help, I think, attract suitors. Number two, it's going to, I think, add value to the project itself. So we're looking to address some of those items as we move the project forward, but also with the lens of, should we actually look at an alternative production scenario as we described earlier, where we produce an on-site concentrate. These things would need to be done for ourselves anyway, if we're going to move the asset forward. So, we are looking to gradually de-risk it, address the priorities first, and move this project along. I think as we move it along, everything shown in the past, it becomes more attractive, and we feel there's opportunity to unlock value there with more spend.
Would any of those decisions depend on what happens in Mexico? Like if you get the permit, and then you have you raise money, you do a drill program, you like what you're seeing there, would your opinion on Goldfields change? Would you be thinking about, I don't know, spinning it out at that point, or selling it quicker so you can focus more on Mexico? Yeah, what's kind of the combined thinking there?
Yeah, well, it's an incredibly exciting asset, and you could quite quickly see a scenario where that project does become the focus for the bigger focus for the company. It's got that type of potential for sure. We look at it more as a pipeline. We're trying to march assets up that Lassonde curve. Goldfields is further up. We still believe we can unlock a lot of value there still through exploration, through some key de-risking, as I mentioned. Mexico is a little bit further down the curve there. We just think there's the enormous exploration upside there. So we see it as a pipeline, moving these projects gradually up and looking to potentially transact along the way, while also bringing in other projects, new acquisitions over time. Perhaps if there's a divestment on Goldfields, using some of the proceeds to then look for additional assets. We continue to do that, being opportunistic. The uranium projects we generated reflects our entrepreneurial spirit there. So yeah, to answer your answer to your question, but Mexico could become a focus, but obviously not taking the eyes off of Goldfields, where we see the moving assets along that pipeline and creating value on all our assets.
So correct me if I'm wrong. I don't want to be putting words in your mouth, but essentially Goldfields backstopping value, Mexico upside optionality. Does that make any sense?
100%. I think that's a lot of people see it. We see it like that, and that I think is what's unique about our story is we have some real stability in Goldfields. It's a robust development asset, top tier jurisdiction. It's comparatively de-risked for PA stage project. It really more than underpins our value if you look at a $60 million market cap. And then you got Mexico. Essentially, it comes for free, and tremendous opportunity to unlock value there.
I've spoken to a few people who work in Mexico, and since you and I talked about this, because the asset does interest me, and they've confirmed that it's not the easiest place to get community approval, just historically, because there hasn't been much operations, and whatever there has been, history hasn't always been too kind to it. But have you made any progress there already? What's the situation? Has it changed between now and the last time we spoke?
Yes, I mean, you're absolutely right. I mean, Chiapas is not a well-known mining province. I mean, what the project has going for it is it does have a legacy of operating. There's been around 90,000 meters drilled there between 2003 and 2009. And a lot of that was done by our predecessor, Linear Gold, who was able to very successfully, through community programs, some key people on the ground there. Those people are back with us. The people who established relationships, respected by the communities, known by the community. So we working through that process. Now there is a process in Mexico for this. It's a legal process. It's controlled by the agrarian authorities, and it's all about getting consent and getting exploration agreements signed through a majority vote from the landowners who hold the surface rights. And that process, it takes time. So we've continued to get support. These processes are never straightforward, but we are moving in the right direction with that. And in terms of timing, it may be weeks, it may be a few months. It's hard to say. We need to go through the process, and we don't control that process. We've been providing the information. We continue to do that about the project, about the stage, the impacts, the benefits. We've spoken about the specifics on agreements, but there's a process that we still need to go through there. So we're working on it. We've got the best people we believe on it, and we'll continue to move that forward, and with the view of hopefully getting those exploration agreements completed in the nearest possible time frame.
Who's we in this situation? Do you have people specifically working on the community situation in Mexico kind of full time? Is that something you deal with personally? Yeah, what does that look like?
Yeah, we have a team. The main lead or community manager there worked on the project previously back with Linear Gold 2003 to 2007. So he's leading the efforts there. And then we have a few other people on the ground who've also previously been associated with the project, some of them from the community. So it's a team of, three to four people, different areas who are engaging with various stakeholders, from the communities to the church to the municipal leaders to the state government. So it's really about getting broad-based support across all the stakeholders for the project. We see that if we're going to build a sustainable operation there for exploration and beyond, we need to broadly engage across all the stakeholders and build that foundation of support, have everyone informed about who we are exactly, how we're going to work, and then we have to deliver on who we are and what we've said. That is key. You can't just say things and do something different. And we've been about that. We've done that in Saskatchewan, and it's all about then implementation and managing things from a community perspective, because it will require that on an ongoing basis. And we've identified the people to do that once we able to start exploration.
What does it really look like on the ground right now? What's the community telling you? Do they have any pushback or concerns or requests? Yeah, what's kind of the stage at which you are right now?
Yeah, of course. Any engagement process is going to have questions, concerns. There'll be pushback. There'll be certain individuals that aren't in support of. We've had comments that aren't in support of mining, and mining is different. We're looking to explore here. Yes, the end goal is mining. Absolutely, there's no question. You explore to, but they're different processes, right? Like we're talking about a process here to do some more drilling on the projects, see how the potential of the resources are, take that forward. That process has certain impacts, certain benefits. It's the same as in Saskatchewan. When you get to a mining process, it's a whole new consultation. You need to have how are you going to mine? What are the impacts? The benefits are substantially larger. That's a different conversation. Yes, they are interlinked, and you need to have that visibility through the process, hence the broader stakeholder support. But yes, of course, any engagement process, be it will have not everyone necessarily in favor, but it's a matter of information sharing, educating about who we are, what we plan to do, and building stronger and stronger support for the project, and then being able to do it responsibly, but able to the concerns or pushback you receive during the engagement process, make sure you mitigate or address those so that those don't become issues in the future. So it's a delicate balance, but we have, the right team there to do that and manage it going forward.
How far along that process are you? Like if you had I don't know, like in a video game, you had a progress bar and it says, loading 67%, whatever it might be. How what's the percentage going to be for you if you had that?
Yeah, I mean, we are far along. We've done, I'd say 80% along, and it's hard to gauge an exact percent here. It might be 70 to 90. I don't know. It's somewhere in that region. Sometimes these processes, they aren't a straight line, right? You take many steps forward and then there maybe one step back, and then you take a few more steps forward, and it's an iterative process. You're dealing with people. These issues can become sensitive. It's not a no well-known mining area, so there's more questions, there's more input. But the potential upside and reward here for a project, and I don't just talk from our shareholders' perspective. I think, definitely from a community's perspective, is considerable. It's got the type of legs to be a truly like a substantial project. If you look at the historical resources, the opportunities just in the cover rocks, and then you've got this big porphyry system at depth, which hasn't been evaluated to any extent. There's a significant opportunity there for our shareholders, but also for the community in terms of obviously all the benefits that can come, through employment, procurement, socials, and or economic stimulus to the community. So it's a process, but we see the potential there, and we've had a lot, from the landowners themselves, a lot of strong support to see the company back and working. It was actually, we went down there because we did get interest from the community going back a few years, like would Linear Gold, come back and do some work, and that's come from some of the leadership there, and they've been truly supportive. But we need to complete this process and get the foundation established to advance the project.
Mhm. Well, as long as the progress bar doesn't get stuck at 99%, then I suppose we'll all be happy. And then
Well, and that we look, we got to own the risks there, and this is the risk. I'm glad we're talking about it because it is a real risk for the project, but it's, also the opportunity there is large, and would we working well, and we believe we've got the right team and approach to make this a success. So we'll keep at it, and Linear Gold worked there successfully. I don't see any reason why it can't happen, and then go beyond to do something substantial there. And I think broadly speaking, Chiapas are looking for foreign investment opportunities. It's a very, it's an amazing state in southern Mexico. It's actually rated the second safest state in Mexico. The rule of law and order there has been brought firmly under control by the new governor. It's really on a good trajectory. So very proud to be working there. But obviously we've got a few more steps to take here before we can get there. But it's an exciting opportunity for us for sure.
is it reasonable, to the best of your guessing abilities here, to expect to see some work there in 2026?
Absolutely, yeah. We'd want to see that. We've worked diligently at this community engagement over certainly over the past, few months has been sort of a increased effort. You can't keep knocking on a door forever. You've got to move this thing forward or not. So that would be the goal. I think the earliest we could get drilling there, given we have to first get exploration agreements, then drilling permits, and we've already spoken to the federal officer on the drilling permits. They've indicated they would support that. Obviously, they need to get all the details before they can approve anything. But earliest we could start drilling would be Q2 next year, but it may be Q3. But that is the absolute goal, and we need to respect the timelines, the community's request for their processes, but also, in reciprocal requests, like we need to also make investment decisions for the company, and there's no lack of a things to do at Goldfields in terms of the expansion potential, etc. But we need to look at that pragmatically and make the best decisions. But we are very positive about moving Mexico forward, and hope to report some good outcomes there in the near term.
In the sake of time, I know you gentlemen almost have to run here. What's going on with the uranium assets? I know you've started drilling one of those with the partners. What's an update there? What's going on there?
Yeah, so we've work's ongoing, and it's great to have these projects partner funded. We obviously like the projects. There's potential there, but we really focus on our gold story now. So it's non-dilutive, partner funded. We can retain upside in those projects. We also do generate some revenues through option fees, some management fees there, as well as like rental of our gear out of the Uranium City area. We have facilities there, so that helps all to cover G&A. But it's really a case of moving those assets forward, and hopefully a discovery upside there in the future for us.
When are you going to have some assays out of that, or how's the drill program looking like right now?
Yeah, we've got to get those results in, all the full set of results before we can report anything there. Obviously, Aero Energy, our partner, is the funding partner, so we work with them on that, and they drive the exploration sort of processes forward there.
I ask you this last time we spoke. I'll ask to you again. It's been about 2 months. What's the most fair criticism been of Fortune Bay that you've heard in the meantime?
Um, Criticism, Gareth. I haven't heard anything particular. I've had some compliments. I think we could get out more and talk to people like yourself, and you make more calls. I think that we are working at the marketing side, and it's sort of steadily increasing. But Gareth and I are technical guys, so we often like to just have our heads down on the technical side. Gareth, anything from your side?
I'll actually change up the question for you, Gary, because I didn't ask you that last time. But from the technical side, if you had a magic wand, you could wave it and make one challenge go away. What would you wave it at?
Uh, Getting a few more employees to help us get through all of this stuff, which I think we're going to be working on pretty soon. That would be my magic wand. It's
Is that,
uh,
are,
it's busy, it's busy it's busy times at the moment.
are you guys looking to increase G&A by any meaningful amounts and take on any like a lot of new staff, or what would that look like?
Yeah, we're looking, yes, for sure. We need we went through a period the last couple of years where we were quieter, right? And we've always operated trying to keep our burn rate low. That's how we only have 58 million shares outstanding here. We've been able to keep things lean and mean, between the core of it being Gareth and I. But as we now complete this financing, and we're looking to drill and really get things moving, we do need to build up some staff. Obviously they will be fully allocated to the project so that they can draw down on flow through there. So it's not really necessarily directly a bigger G&A for us. So we definitely looking, we be interviewing candidates over the next week or so here, and then be ready to enlarge the team to support plans for the projects.
Well, if you need a professional joke maker, although I'm not a very good one, I would still like to offer myself up for that job.
We'll have to get you into the field, Antonio. You've got some good questions, and it'd be nice to show you the rocks at some stage.
That would be really cool, especially in Saskatchewan. Although I think this time of year, Mexico is preferable in terms of weather. But no, it's been a good overview. You got to run here in a couple of minutes, so I'll just close it off here. What do you guys wish I would have asked, or what did you come here hoping to talk about that I've failed to bring up?
I think we've covered it all. I think it was nice to dive into that the Goldfields PEA more. We hadn't had an opportunity to talk about that before, so yeah, no, thanks. I think a great set of questions, and always good to talk to you, Antonio.
Thank you so much, Garrett. Anything you want to add here?
No, all good.
Thank you so much for sitting down with me today, and hopefully speak to you again soon.
Yeah,
Nice to
just
meet you.
bye.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Oh, so unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so cost, arising out of any use or reproduction of the content published by Resource Talks, or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."